This week I'm joined by Hanson. How are you, Brett?
Yes, I'm good, thanks, Howard. What about yourself? How's things going?
I'm well, very, very well. Thank you very much. Our topic this week is residence, with a focus on tax residence in Spain. Brett, I believe legal residence and tax residence aren't quite the same thing. What's the difference? And can you have residency in Spain without being a tax resident, or vice versa?
So, Howard, lawful residence relates to your rights as a national of one country to live and work in another. For example, if you were lawfully settled in Spain before the end of 2020 and hold an official residence card, whether that's the older green card or the newer TIE, you should have nothing to worry about. Your citizens' rights are locked in and they continue for as long as you're resident here in Spain. Since Brexit, though, UK nationals can continue to apply for residence in Spain, but have to do so via a visa application. But without one of these three visas or an official residence card, then UK nationals are only permitted to spend up to 90 days in any rolling 180-day period in the whole Schengen area, even if you own a property here in Spain. When it comes to tax residence, you do not have a choice here. You're either a tax resident under the Spanish domestic rules or not. So for anyone thinking of applying for legal residence, it is important to be aware as to whether your tax status will change and to consider how this will impact you with regards to your savings, investments and pensions.
So what makes you a tax resident in Spain? Is it just a question of counting how many days you spend here?
Okay, Howard, so someone is a Spanish tax resident if they meet any of the three following requirements. First, if you spend more than 183 days here in Spain in one calendar year, i.e. from the 1st of January to the 31st December. These days do not have to be consecutive, and in this situation, you become a resident whether or not you take out a formal or lawful residency and whether or not you're registered for tax purposes. So this one is just a matter of counting the days here in Spain, Howard. However, if your centre of economic interest is in Spain, meaning if the base for your economic or professional activities is here, or if most of your assets are located in Spain, then you can be regarded as a tax resident of Spain under this rule. And the third is if your centre of vital interest is in Spain. This one has been known to catch people out in that someone can be spending less than 183 days here in Spain, but will still be regarded as a resident if their spouse and or dependent minor children live here. So with regards to this one, the number of days you spend in Spain isn't so relevant. It's all about where your spouse and your children are living.
It sounds like it's not quite straightforward. Do you find many people get their tax residency wrong? And what happens when the authorities find out?
Well, I am finding that some people who split their time equally between the UK and Spain assume that the double taxation treaty allows them to choose where they can pay tax, and that is not what the double taxation treaty states. And in more recent years, what with the fact people are able to work online, families have moved to Spain with children in school, and the parents are assuming that they're still tax residents in another country. But based on the centre of vital interest rule I've just mentioned, this clearly is not the case. And as a result, from time to time, I do get calls, primarily from UK nationals living here, who have been contacted by the Spanish tax authorities and are now facing tax investigations, back taxes and penalties, especially since the Spanish tax authorities introduced their tax control plan back in 2021. So my advice to any listeners, Howard, who meet any of the tax residence criteria I mentioned before, they really should look to regularise their affairs as soon as they can.
What are the key issues you think people need to know about taxation in Spain before they become tax resident here?
Well, the key is to understand that if you are a Spanish tax resident, then you are normally liable to Spanish taxes on your worldwide income and assets, regardless of where those assets are. So for example, your income from employment or pensions are liable to Spanish income tax. Interest and dividends on bank accounts and investments are liable to Spanish savings tax rates. If you sell an asset, whether it's a property or an investment, then this is liable to Spanish capital gains tax. And if you live in a region which is wealth tax, then your worldwide assets are liable to this tax. Plus there is the solidarity tax which came in a couple of years ago. And likewise, if you receive an inheritance and you are a Spanish tax resident, then you could pay Spanish succession tax on this. And all of these taxes are not dependent upon the incomes, gains, inheritances being paid into Spain. The key to all of this is where you are tax resident, not where the assets or income are held. So if you are thinking of moving to Spain and you are concerned that you will pay too much tax, or if any of our listeners are already living here and feel that they are paying too much tax, the good news is that the Spanish tax regime does have solutions which can minimize tax in Spain. Blevins Frank specializes in reducing tax on investments, pensions, wealth and inheritance, and our advisors are cross-border wealth management experts. In fact, Howard, for many of our clients, we've been able to reduce their tax liabilities and put them in a position where they legitimately pay less tax here in Spain than what they would pay in the UK, whilst also having the benefits of living here in Spain. So should anyone want to contact their local Blevins Franks office, then they can do so via our website, blevinsfranks.com.
Many thanks, Brett. Informative as always. Thank you very much.
Thank you, Howard. Speak to you soon. Bye now.